India finally manages to get a trade deal with the US after months of painful negotiations. So, if New Delhi can do it, is Jakarta next in line? Live from the Indonesian Economic Summit, this is Insight with Haslinda Amin. We'll be speaking to the person leading the country's talks with the Trump administration. The Indonesian President's Special Advisor for International Trade and Multilateral Cooperation, Mari Pangestu, will be joining us with the very latest. Plus, we have some great interviews coming up from the Singapore Air Show, including the CEO of India's largest airline, IndiGo, and the IATA chief, Willie Walsh. Asian markets stabilizing after posting their steepest two-day drop since April. Stocks in the region getting a lift from tech, with Korea recovering after Monday's plunge. Gold and silver clawing back some losses following the recent sell-off as traders exited the record-breaking rally in precious metals. Now, later this hour, we'll have the latest rate decision from the RBA. Economists expect Australia's central bank to buck the global trend with a 25 basis point rate hike. We'll also be keeping an eye on the latest Japan 10-year bond auction ahead of this weekend's election. We're also counting down to the Indian market open this hour after President Trump announced that the U.S. will slash tariffs on India to ease months of trade tensions. Trump said he will cut the levies on Indian goods to 18% from 25% after a phone call with Prime Minister Narendra Modi. Trump says Modi agreed to stop buying Russian oil as part of the deal. ADRs of Indian companies from HDFC Bank to Infosys jumped in New York on the news, while iShares MSCI India ETF also rallied. Now let's get immediate corporate reaction to the news of that trade deal and crossover to the Singapore Air Show, where our very own Avril Hong is with our next guest. Avril.
Yeah, Has, joining us now, Pieter Elbers, CEO of IndiGo. This is, of course, India's largest carrier and the world's second largest budget airline, with a record order book of around 1,000 more jets. Peter, it's always good to see you.
Likewise, thank you.
My colleague's just been talking about the US-India trade deal. What are you seeing in terms of potential indirect benefits from this?
Well, it's a very important day, actually, and the announcement clearly is very much welcome for us. If you look actually at the last week, first there was the EU-India trade deal, then there was the budget being presented by the Indian government, and now we have this. And I think it all points to the same direction. The Indian economy is again expected to grow over 7%, and today it's the fourth largest economy in the world, on its way to be the third largest economy in the world. And clearly for an airline like ours, which is going more and more international, those developments are very much welcomed.
So what are you going to be, putting into your projections, given now we have this US-India trade deal?
Well, we are already on the path of further expanding international that traditionally was very much focused in the region itself, from India to the Middle East or to Southeast Asia. We have started our operations into Europe, connecting with operators, not only to Europe, but also connecting to the US. And if you take that all together, these trade deals really are helpful in further boosting that connectivity.
How much of a boost have you? Maybe think about the numbers.
Well, I don't think I can precisely pinpoint it to a single number, but clearly, we are on the way to become a 40% of our ASKs international by 2030. That in itself, from an airline which used to be primarily domestic, clearly the international connectivity for India is increasingly important.
We have to reflect on the December disruption, the chaos there as well. What steps are being put in place so that we ensure this doesn't happen again?
Yeah, well, we had 3 very bad days, December 3, 4, 5. Eventually on 5th, we reset the network and then rebuild it from 6th. Very quickly, actually, rebuild it. So we had to cancel around 2,500 flights on those 3 days. Compounding effect of multiple factors. So what we're doing now is building resilience into the system. We evaluate, we learn, we relook our systems, processes and structures. Clearly other airlines have gone through this as well, so we take some of their learnings also into our process to learn from it.
What exactly, in terms of other specifics, can you share with us in what you are doing to help investor confidence come back and, passenger confidence as well?
Yeah, I think the strongest sign of confidence we wanted to give is as quick as possibly to restore the operation, which we have done. It was basically back on the 5th we did the reset, on the 6th we restarted, and on the 9th we stabilized the operation. So it was done actually a very quick time. On the 9th we were operating 1,700, 1,800 daily flights, and today we're back to the same 2,200 daily flights we have. So I think that is a strong testament to the operating foundations and fundamentals of the company. When it comes to the customers, we took a lot of actions immediately: refunds, luggage, immediate care. Then we moved to basically making sure that all the sort of financial follow-up was done adequately for our customers. And today we're back to roughly 370 to 380,000 customers on a single day. So every 3 days we welcome 1 million customers, and we're back to the situation we had just prior to the first days of December.
And the pilot rest period relaxation comes to an end February 10th as well. Are you guys ready for that?
Yeah, of course. I mean, we worked very hard over the last months and weeks, really. Again, the priority first was to restore the network, restabilize the network. Now we have a whole set initiative, more forward-looking KPIs. We review our network, and of course, we closely monitor the situation towards Feb 10th.
In terms of flights, it's still a 10% government curve that you're facing. What are you seeing in terms of the near-term impact on growth?
Well, we have given our capacity guidance when we issued our Q3 earnings. We've given a capacity guidance in the range of 10% for Q4, so that's still a significant growth in Q4. We haven't given yet any guidance for the year ahead, but Q4 we look at the range of 10%.
So are you seeing that impact coming through then still in the 3rd or 4th quarter of this year?
Oh, we look at the 4th quarter now, which our 4th quarter is from Jan till March. For that we have given the 10% capacity guidance. We're operating now for the last couple of weeks very stable on these 2,200 daily flights. That compared to last year is still a growth number, and again we somewhat adjust the mix in terms of our flights. We have a strong international growth projection. We keep the domestic operation growing, and with that today we fly 97 destinations in the country itself, over 40 international.
How are you thinking about deliveries in this backdrop though? Is it going to be continuing at the clip that we saw last year then?
Well, IndiGo has, as you kindly introduced, IndiGo has the world's largest order book in place. For the last 2 consecutive years, IndiGo was the single largest taking of planes from Airbus. I think last year it was 7-point-something% of all the Airbus deliveries was going to us. So that order book provides us a line of sight actually going forward, where we will have 1 plane a week being delivered pretty much for the next decade. That allows us to have discussions with airports, with providers on, what's your growth projections and how are we going to deliver on our commitments to our customers to further build that network. So that will continue to drive our growth.
So would you say you have a lot of visibility as far as the Airbus supply issues are concerned?
Well, for us with that number of planes, every plane which comes too late is unwelcome, and we have a discussion, right? India is growing and we want the planes to be there. Having said that, our basis of planes and order book provides us to have some flexibility there, and I think we have demonstrated even in the last 2-3 years that with damp leases we can have some temporary solutions also for that.
How are you thinking about the competition, the competitive environment at this point? I mean, we just heard from Air India last week, they're ordering more jets. I mean, how do you see this shaking out?
Well, I think if you look to competition, for me it's twofold. One is domestic and the other is international. For a country of the size of India, to have 2 large operators and then a couple of other operators, I think you'll find it in other places of the world. So the fact that, of course we compete with Air India as a competitor, but for the size of India, to have 2 large players and a couple of other players is not unlike you find in other parts of the world. I think increasingly we'll see our competition more on the international arena. Since we moved to a larger share of international operation, we're entering markets where non-Indian operators, for a long time basically, were the only operator on certain routes. And the further you go away from India, the lower usually the market share of Indian operators was. That's changed. Singapore itself here today, we fly 86 flights a week. Used to be 25. We fly from 9 Indian cities, used to be 3. So if you add that all up, I think we're shifting away from looking only at the Indian competitive landscape to increasingly the international competitive landscape.
And to the destinations, they include those in the European market, right? You've recently launched some, I think, was it to Athens?
Yeah.
And then Istanbul as well.
You know, we have actually, we've ordered the Airbus 350s, we have 60 of them on order, but these will come only in 27, 28 time frame. So we took an intermediate solution with planes from Norse, where we started our long-haul operations into Manchester, Amsterdam, London. That started actually last summer. Very excited. Last week we started with our Airbus 321 XLR. That's a non-stop flight from Delhi and Mumbai into Athens, Greece. That opportunity allows our Indian travelers to go, you know, holiday makers, mice, whatever they want to do in Europe, go non-stop on these flights. So the XLR, we got another 9 this year, has a great opportunity to build that network for us.
So where are the new routes you're looking at? What are some of the possible new
Well, Athens clearly was the first one. Istanbul is going to be next.
Where else?
We look to more destinations in Asia. We're expanding our network in China. We have launched flights from both Delhi and Kolkata into Guangzhou. I mean, these two huge nations in terms of population and economy, I think will eventually have more air connectivity as well. Southeast Asia is providing new opportunities. We fly to Nairobi from Mumbai, but not yet from Delhi. So we are not in a shortage of new routes. We're in a shortage of new planes.
Okay, so it sounds like there is enough demand. What is that going to mean for, I mean, you mentioned some of this earlier, but the next couple of quarters, the growth and perhaps profitability outlook you're expecting then?
Well, you know, our long-term growth, which we have launched in 22 as compared to 22 to double by the end of the decade, is underpinned by these solid fleet orders. So we have that there. We have some variation possibilities in growth. So, you know, depending on demand, we can, with lease extensions, or we have some flexibility there. We have not given any precise capacity nor profitability guidance for the next year yet. And today I will not make an exception to that as well. But clearly our long-term strategy and ambition really stands out.
We are also hearing from more airlines having conversations about what they want to see in the next generation of aircraft, whether it's from Airbus or Boeing. And it's been interesting in the past decade, the priority has been about fuel efficiency, perhaps at the expense of reliability. If you had a message for the Airbus and the Boeing folks, what would it be?
Well, I think you're pointing very much in what is a crucial topic, and you know, continuing the path of reliability in terms of, you know, how long does an engine stay on wing and what are the maintenance costs related to it they go through a phase. Previous generation aircraft and previous generation engines have gone through that very same phase, and perhaps, you know, when you're in the midst of it, it looks like a slow progress. But I'm very confident that the engine manufacturers will make steps to increase that going forward. And my simple message would be focus today on steps of increasing that reliability and durability rather on the existing engines, rather than jumping into something new at this point in time.
On the issue of cost, do you see the need to spend more to protect the integrity of operations as you continue perhaps dealing with what happened in December?
Well, I think that's part of our regular spending when it comes to IT, systems, processes, overall structure. So it's not per se that we have to spend more, but clearly building resilience in the system and making sure that the massive operation we have today with 2,200 daily flights is further solidified by all our internal processes, structures, planning, etc. That's a key priority for 2026.
Peter, we'll leave it there for today.
Thank you so much.
Great to have you on with us.
Always.
Thank you so much.
Thank you.
Back to you, Has.
That's right, Bloomberg's Evel Hong, who obviously got the red memo today, and she was speaking to Pieter Elbers, CEO of IndiGo. And there's more just ahead from the Singapore Air Show as tariff uncertainty and fuel prices weigh on the global industry. IATA Director General Willie Walsh will be joining us with his outlook. Keep it here with us. This is Bloomberg.
commercial aviation, especially in this part of the world, is doing pretty well. In 2025, there's 11% growth in air travel, which is double the rate of growth of the global air transport industry. So Asia Pacific is still firing on all cylinders, but unfortunately, I think the cylinders of the industry are not firing as frequently as necessary.
What we see is that worldwide, the number of flight hours in business jets is increasing, and even over what we had pre-COVID. So, of course, we expect a certain demand in business jets, and that's actually what we are seeing. And of course, in the United States, like in other countries as well. I mean, Europe, Africa, the Asian market, and actually the Asian market is a very important market. That's the reason why, by the way, we are here.
Some of our guests from the Singapore Air Show sharing their insights on the travel industry. Let's head back to the event. Avril is with our next guest, who runs a trade association that represents 360 airlines, comprising over 80% of global air traffic. Avril.
That's right, Has. Joining us now is Willie Walsh. She's Director General of the International Air Transport Association. Great to have you, Willie. We are seeing global demand for air travel, for cargo as well, looking pretty resilient. The interesting thing is the underperformance of the U.S. market. Is that a trend that you see more entrenched for the rest of 2026 per se?
Yeah, I think expected growth in the US market is lower than the global average. So this year we saw growth of 5.3% globally. US really did lag behind, and next year we're looking at 4.9% globally, with the US broadly flat. So I think it's been a trend for some time now, and would expect that to continue beyond 2026 as well.
Is it because of it's a trend that has accelerated because of the policies coming out of the White House?
No, I don't think so. I think it's a combination of factors. Obviously, we've had consolidation in the US market. The focus has tended to be more on the domestic market than internationally. All of the airlines have struggled to get new aircraft, so it's more of an impact, I think, on the US majors than maybe some other airlines. I think it will reverse as we go forward and once the supply chain issues get resolved.
We are seeing Trump, sending messages on decertifying Canadian aircraft, though. Do you worry that perhaps the White House is increasingly dipping its toes into a particularly sensitive area of aviation, and that's safety?
No, I have full confidence in the safety regulators. These are highly professional people, and I would expect them to continue to operate without political interference. It creates noise in the background, but I have full confidence in both the professionals at the FAA and in safety regulators in other parts of the world, and I don't believe politics will interfere in that.
We're also seeing the airspace closures perhaps a bit more complicated. Are you seeing among your members that there is having an impact, pronounced one, on their routes?
Well, it certainly had an impact with the closure of Russian airspace for principally European airlines flying to Asia because of the extended distance that they have to cover. I think we've seen the impact of that already. It makes things more complicated when we get some airspace closures over the Middle East because of the amount of traffic overflying that area. I see this as business as usual, to be honest with you. We've always had some issues. Well, certainly, for a long time now we have had airspace closures, but it does make it more difficult as you see the number of flights increasing and all trying to go through a limited amount of airspace. So challenging, but not something that we have been able to.
How are the carriers adjusting? Exactly.
Well, you just have to be flexible, and I think that's what happens. You see airspace close in one part of the world, people automatically redirect their flights, to avoid the closure of airspace, and I think that's been successful for some time. It puts pressure on the airlines, it increases operational complexity, it often means that the flights are longer than they had scheduled. So it's a complication that we could do without, but it hasn't stopped most airlines from operating in the route network that they wanted to operate.
Something that's helped the industry, though, I think, is the relatively low oil prices in the past year as well. Do you see that trend continuing in 2026?
Well, interestingly, we're not really seeing it have significant benefit for the airlines because the price of jet fuel has not fallen to the same degree as the crude price. And in fact, jet fuel earlier this week was over $100 a barrel when you had crude prices of below 70. So what we've seen is the crack spread has widened significantly, and I think that may be a structural change. So if I go back in a 10-year period between 2010 and 2019, the average difference between crude and jet was about 18%. This year we're expecting it to be closer to 40%. So while there has been some benefit, it's not to the same degree. And obviously, for airlines, fuel represents at least 25% of their cost base. So if you like, the inflation impact of a higher jet fuel price, will continue to put pressure on airline cost base.
So how are the carriers hedging amid all this?
Some hedge, some don't. Hedging has always been, in my opinion anyway, an opportunity to buy you time to adjust to the volatility in the oil price. But what you've seen, a lot of the US carriers don't hedge. A lot of the European carriers will engage in hedge, but they'll be conscious of what their competitors are doing. Because what you don't want to do is get out of line with your major competitors. So hedging is a financial vehicle that some airlines will use, but not all airlines.
With costs in mind, I think IATA's projections for net margins this year, is it 3.9%?
3.9%.
That's still intact?
Yeah. So, we said 3.9 in 2025, and we're forecasting 3.9% in 2026. Slight increase in the operating margin from 6.7 to 6.9%. But still, these are wafer-thin margins, particularly when you look at some of the margins that the key suppliers to the industry are generating. GE Commercial Engines and Services just reported full-year operating margins at 26.6%. 20 points higher than the airlines they're serving. So it's a big disconnect between the airlines who are doing all the work and some of the key suppliers who are supplying the airlines.
What about when it comes to, we've gotten about 7 or 8 minutes into this conversation without talking about SEFs, which was something that was, everyone's minds were kind of focused on it in the past couple of iterations of this air show. Do you see that coming back to the table?
Well, it's still very much on the agenda. So at the Changi Aviation Summit yesterday here in Singapore, there was quite a bit of discussion around sustainability and SAF. It very much depends on where you are and what part of the world you're in. I think what we've seen is some of the initiatives that governments have used to try and promote the production of sustainable fuels just hasn't worked, particularly in Europe, where they've used mandates to try and force airlines to buy a product that doesn't exist. And all that's led to is higher prices, interestingly, higher prices for jet fuel and for sustainable fuel. So I think there's going to have to be a reevaluation of the methods that have been used by governments, the policies that they've applied on this very sensitive.
What are some of the other trends you're seeing in the industry? Everybody talks about AI, right? We've seen increasingly the cyber threats are getting sophisticated.
Yeah.
Can AI be used to counter those threats in a way?
I think everybody sees both opportunities and threats with AI. In my view, there are lots of opportunities available to the industry, and I would expect the industry to take advantage of those opportunities as quickly as possible, while at the same time then considering, do they have to protect themselves against any AI threats that will come along? The issue of cyber, is always there. It's a non-stop. You can never satisfy yourself that you're 100% secure because the thing, it changes so fast. So we've just got to continue to work closely with one another, work closely with other industries to try and protect ourselves and protect our customers as best we possibly can.
Okay, Willie, on that note, thank you. It's been a pleasure. Always good to chat with you. Sending it back to you, Has.
Our very own Avril Hong with Willie Walsh of the International Air Transport Association. Of course, it's about AI. It is about supply chains. Now, Australia's central bank is about to make an interest rate call that may go against a global easing trend, with most economists expecting a hike to tackle resurgent inflation. We'll break that decision for you next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the Indonesia Economic Summit here in Jakarta. Let's do a check on how the Aussie is doing. Of course, the Aussie's up about 4% among the best performers versus the USD this year. That's on the back of expectations that the RBA is set to raise rates. Of course, we're awaiting for that decision. Economists we speak to say that you can expect a hike of 25 basis points, inflation rearing its ugly head yet again. And of course, we have unemployment in a better place than expected. Expectations are that the RBA will raise rates 25 basis points to 3.85%. That, of course, will be in contrast to some of the other central banks around the world, which are either likely to stand pat or the Fed, which is expected to cut rates. Again, we're keeping a track on the Aussie assets as we await that decision from the RBA. We know that the Aussie dollar has seen some strength. Well, we have that decision right now. The RBA has raised its cash rate target by 25 basis points to 3.85%. That's pretty much what was expected. Let's bring in Australia economy and government reporter James Mega on the back of that decision. James, your thoughts on that? You were expecting the RBA to actually stand pat.
I really didn't have a strong opinion either way. I mean, there were some economists who were expecting them to stay pat, but the majority of the people we surveyed predicted it correctly that they did raise by 25 basis points. And I think the rebound in inflation that you've seen over the last few months in Australia, coupled with the employment situation, the labor market looking better than expected, I think those two things made it pretty clear that we made it pretty clear why they've done what they've done. I guess the next question is, is this the only time they're going to do it, or are they going to follow this up with further rate hikes? And I guess we'll find out more about that in an hour or so when Michelle Bullock talks to the media. But the RBA doing, I think, exactly what most people were expecting them to do today.
I guess with inflation rearing its ugly head again, James, you got to wonder where the RBA goes from here. I mean, is there pressure for more rate hikes from here, you think?
If inflation doesn't come back down below 3%, then I think the pressures you see on them to raise rates, which they've just done, will appear again. It may be that they can then in their outlook report today say, well, we've raised rates, and now with that rate hike, we expect inflation to come back down below 3%, which is within a target band. But if that doesn't happen, there's going to be pressure on the bank, and there's also going to be more pressure on the government. I mean, here in Canberra, you're seeing a lot of criticism of the government for its budget settings and for its tax policy settings. The opposition parties are saying that the government is spending too much and that's driving up inflation. Some of the minor parties are saying the government's not taxing enough and they should be taxing the housing market more to bring down housing inflation. And so, there is pressure on the RBA, but there's also a lot of pressure on the government as it's now building the budget, which will be announced in May, to try and do more as well to try and bring that inflation down. So I think if that inflation doesn't come down over the next few months, as we get into budget season and as we get to the next RBA decision, you may be seeing more pressure on both of those entities to do more.
James, as we speak, we're seeing reaction from India, the Indian rupee rising 1.2%. And that's, of course, on the back of the trade deal that India has come to with the U.S., a much anticipated trade deal, of course, 6 months in the making, and we're seeing reaction from Indian assets. Again, the Indian rupee up about 1.2% from the get-go. And of course, James, we know the Aussie dollar has been quite a strong performer. I mean, what are markets saying about where it goes from here?
I think the expectation was that a further rate hike is going to drive the dollar, or is going to be one of the factors that will drive the dollar higher again, and that will act to slow down domestic economic activity in Australia a little bit. And so there is an expectation that the higher rate or the higher interest rate will flow through to those currency markets. I'm not really sure. I'm not making a prediction on where the US dollar swap will go at this point or anything like that. But generally when there is a rate hike, and especially with the US, the Fed then cuts in the future, those kind of increasing differentials will put more pressure on the Australian dollar to rise as the US dollar is falling.
James, thank you so much for that. Australia economy and government reporter James Mega coming to us from Canberra. And we're following trading in the Indian rupee and bond markets ahead of the stock market open in just a few minutes. President Trump, of course, saying he will cut punitive tariffs on Indian goods to 18% after New Delhi agreed to stop buying Russian crude. India has been seeking a trade deal with the U.S. for months, with the trade tensions and pressure on exporters a persistent overhang for Indian assets from stocks to the rupee. Let's head back to the Singapore Air Show. Avril is standing by with our next guest, who's an executive at a leading American manufacturer of luxury business jets. Avril.
Yeah, joining us now is Scott Neal, Senior Vice President of Worldwide Sales at Gulfstream. Scott, we have been digesting these details from the US-India trade deal. We are seeing increasingly these tariff negotiations and deals. I wonder, what is your sense of how US policy has perhaps been a boost for the business, because it was a great year for sales for the company in 2025?
2025 was a great year for the company, both for sales and deliveries. We delivered about 158 aircraft last year, which was a record for us. So it was a great year. We're always watching, the global geopolitical and economic changes around the world, and we've proven very resilient to adapting to changes, whether it be tariffs or economic conditions or different market conditions around the world. We're actually excited about India. Our activity in India is growing right now. So I think that's some positive news for us. And we're spending quite a bit of effort in India right now. Our airplanes are being very well received in the India market.
Are you seeing the benefits of U.S. policy directly on the demand for your jets?
Well, to an extent. I think that the tax provision passed last year on July 4th, which reinstated a permanent accelerated depreciation, certainly helped us in the United States with corporations that can take advantage of accelerated depreciation. So from that perspective, that certainly helped Gulfstream activities last year in the U.S.
So India, you say, is going to be an important market. Where are the bright spots or the markets of priority for your firm?
Really, the whole country. So we're seeing good activity with corporations and private individuals. The Gulfstream fleet today has unique capabilities of being able to fly very long distance, or smaller aircraft can fly shorter distances. So we actually have aircraft, Gulfstream now, for every market segment, which we think will work very well for India, whether you need a short-range mission or an extra long-range mission.
And globally, your strongest market is still the U.S., right?
Still continues to be the U.S., but we continue to see great activity, especially here in Southeast Asia. Vietnam, we've had a tremendous amount of success, in Malaysia, Singapore, also in the Middle East. Gulfstream aircraft are the #1 choice in the Middle East for large cabin, long-range flying. And then Europe, we're expanding quite a bit in Europe too. So we're busy globally right now.
What about China?
China, we're still selling aircraft into China. The market has tempered a little bit from what we saw in the last 7-8 years, but we still have a big presence in China. We have more than 100 airplanes based in China and the greater China region. So we remain focused on China, and it's still an important market for us.
How much has that tempering come through, and how are you putting that into your projections for the next 3 years, that slowing in the Chinese market?
Well, we've seen, like, for instance, as a market like China has slowed, we've seen other markets pick up, like Vietnam and Malaysia, Singapore, Saudi Arabia, the UAE. So it tends to, there's some give and take in regions around the world that tend to make up for any shortfall in a given region.
What about sales to Canada? What's the status of that?
Well, Canada is a good market for us. We're working to get some of our aircraft certified in Canada right now, which will help us have better sales success in Canada. But we've got a number of Gulfstreams based there, and we'll continue to focus on that market as well.
Yeah, what's the latest on the engagement you're having with Transport Canada on the certification of your jets?
Well, we're aware of President Trump's social media post last week, and I can tell you that we have 4 aircraft right now, the G500, G600, G700, and G800, awaiting certification in Canada. Those aircraft have been certified in the U.S. for quite some time, especially the G500 that was certified in 2018, yet is still not certified in Canada. So we think that there is opportunity with the U.S.-Canada bilateral aviation safety agreement to get Gulfstream aircraft certified in Canada. Listen, we've got a number of aircraft that are certified in the U.S. by IATA in Europe, by the UK CAA, and even in India, but not yet in Canada.
What do you think the holdup is then?
That would be a good question for the people at Transport Canada.
Okay, talk to us about when you're looking at your next-gen aircraft, 300s, 400s. How is the demand trajectory looking then on those new jets, and how are you thinking about certification and bringing it onto the market as well?
Well, we're seeing good demand across the whole product line because now we have a Gulfstream that can fit every mission, from the super mid-size, shorter range G300 all the way up to the ultra long range G800, which can fly for 8,200 nautical miles. So we really have aircraft that can meet all missions, all price points, all ranges.
Are you looking at ramping up production overall for this year, given how strong your sales looked last year?
Well, for this year, we plan to deliver about 160 airplanes, so up slightly from last year, and we continue to evaluate production rates.
All right, Scott, good to have you with us.
Good to be here.
Thanks
Thank you very much.
for sharing more about the business with us and the Bloomberg audience as well. Back to you, Has.
Great perspective there, Avril Hong speaking with Scott Neal of Gulfstream. Let's do a check on how Indian markets are shaping up ahead of the open. Of course, Indian markets has a huge news to provide that boost. Of course, the deal with the U.S., a trade deal, long time in the making, 6 months in the making. In fact, we're seeing the early numbers really strong right now. The Sensex up almost 5% as we speak. We're keeping an eye as well on the likes of stocks, the likes of Reliance, for instance, that commitment to stop buying Russian crude is seen as good news for Reliance. That has been seen as an overhang for the company. Reliance currently trading up by more than 6%. So Indian assets getting a huge boost this morning as it sets up its trading day. Still ahead on Insight, the Indonesian president's special advisor, Mari Pangestu, will update us on progress towards a U.S. trade deal. That conversation next year at the Indonesia Economic Summit in Jakarta. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the Indonesia Economic Summit here in Jakarta. Let's do a check on Indian markets, surging after President Trump announced a long-awaited trade deal with New Delhi. The tariff relief removes a significant overhang and may trigger global fund managers to return to the Indian stocks as well as the Indian rupee, which, by the way, is posting its biggest gain in about 3 years. That renewed optimism could even be enough to offset concerns of a proposed tax hike on equity derivatives announced in Sunday's budget. Now, with India's trade deal wrapped up, attention now turns to Indonesia. A government minister has told local media that talks with Washington are largely complete, and they're now awaiting a meeting between President Trump and his Indonesian counterpart, Prabowo Subianto, to sign off on the details. Indonesian officials had said in December they expected Prabowo to sign a deal in the U.S. by late January. Our next guest is one of Southeast Asia's most respected voices on global trade, a seasoned policymaker and economist. She is a veteran of multilateral trade negotiations. Let's bring in Mari Pangestu, the Indonesian president's special advisor for international trade and multilateral cooperation. Ibu Mari, always good to have you on the show. Yeah. Where are we with this trade deal? India has signed the deal. Is Indonesia next?
I believe so. As you already mentioned, the government has announced that we have completed the negotiations and they're doing legal scrubbing on both sides. And now they're just waiting for the schedule for the two presidents to be able to sign it. So I believe we're there. And our tariff is 19%. since everything is relative, 1% lower than 1% higher than India. But I think the details will be important, especially the exceptions that we could be getting on some of our important export products. Yeah.
We have been here before, where we're close to the deal, and yet the deal is not signed. India, case in point, waited 6 months on the back of that trade deal being signed off. I'm just wondering, are there still issues on the table which are a stumbling block?
I believe we've overcome most of the so-called stumbling block issues in a kind of hopefully a balanced way.
What were they?
Without going into details, I think basically what we were worried about as Indonesia, reflecting on what happened in other countries, we didn't want just a unilateral deal. We wanted a more balanced deal, so that there's balance in terms of, we give market access, we agree to purchase goods from the U.S., but what do we get in return should also be clear, which is some of the exceptions that we will get below 19% on some of the goods, like the so-called naturally available products that they don't have, like coffee, tea, palm oil. And then hopefully we will get some on the labor-intensive sectors, which are important for us to access the U.S. market.
Were there additional asks on the part of the U.S.? Because we have read reports suggesting perhaps the U.S. wanted Indonesia to buy military equipment from the U.S.
Well, there's always all these additional asks. But I think, again, what we've tried to approach it in a very pragmatic way. Look, this has to be balanced. We deal with it by saying both sides have to have to be subjected to our domestic laws and regulations. And to some extent, we are using also the multilateral disciplines that, we can accommodate you or consult with you or review some things, but subject to our domestic policies and regulations and WTO rules. So, I think we try to balance it in that way. And that besides trade, I think the other aspect is investment. We try to also have build it on a strategic relationship between U.S. and Indonesia, so that it's also about attracting U.S. investments here to build out some of our supply chains that will also benefit the U.S.
You talked about how it is important for it to be a balanced trade deal. Is it balanced? Is 18% good enough for Indonesia?
19%.
19% good enough for Indonesia?
Well, relatively speaking, it is on the lower end. ASEAN countries have gotten the lower end, so it's always relative, right? It is what it is. We don't try to debate the rights and wrongs of this.
It is not reciprocal, is it?
It was very unreciprocal at the beginning when we were starting having the discussions last year, but I think it's going towards a more balanced outcome, even though not perfect by any standards, but at least it's more balanced. And I think there's more understanding on both sides that if there are problems, there are issues, it is about both sides trying to work through it. Yeah.
I'm just wondering which industries will be affected the most. I mean, some have pointed to perhaps textiles and footwear and the SMEs, which may get hurt. How does Indonesia protect those industries?
Well, that's exactly why we agreed to, we decided to have the bilateral negotiations with the U.S. because even though our exports to the U.S. is only 10% of our overall exports, for textiles, garments, furniture, and seafood, the dependence on the U.S. market is very high, like above 50%. And these are the labor-intensive sectors. So the labor would be affected, and as a collateral damage, also the suppliers that are linked, the SMEs that are suppliers to these sectors. So that's where we are hoping that we can get some preferential treatment on those sectors. And that's certainly, hopefully, that's the balance that we will get out of the agreement.
Ibu Mari, how do you do global trade at a time when you're unsure whether additional tariffs are coming? Canada, case in point, where when President Trump was unhappy with what was being done by Prime Minister Carney, he threatened to slap additional 100% tariffs. I mean, what do you do? Do you diversify as much as you can? Do you friend-shore as much as you can?
Well, that's a really good question. I think the first thing I would say is that let's not dream about the world ever going back to anything normal that we knew before. This time it's really different. It's ruptured, to use Mark Carney's word. the system is structured. So what do? You have to manage the risk of the uncertainty. The uncertainty is going to be there, and it probably will can escalate. So you deal with the U.S. as you can, deal with it bilaterally, but then you've got to diversify your markets, your trading partners, and maintain the openness that is needed. I believe that the reason why we haven't seen such a negative outcome out of the tariffs, exports still going to the U.S., is because the rest of the world didn't end up having trade wars with each other. So that's very important to maintain. What does that mean? Actually, ASEAN last year and Indonesia crafted a response. Deal with the U.S. bilaterally. Second, build your domestic and regional resilience. So do your homework, because there's opportunity in the reconfiguration of the supply chains. So you need to do your domestic reforms, and then regional reforms or regional resilience by strengthening ASEAN and RCEP. And lastly, we have to maintain the multilateral rules and disciplines of the WTO in the WTO itself, and in the way we are doing even the agreement with the U.S. There is a principle that we agreed on last year, that we will, whatever we do with the U.S., we should not harm each other or our other trading partners, and that we should try to find common positions, even as we deal bilaterally, that doesn't do harm to the rules and
Why should
disciplines.
ASEAN nations deal with the U.S. bilaterally when it can respond collectively? This is a region of more than 600 million people. Can there be a collective response?
No, the U.S., we tried that. The U.S. was not going to have anything like that. They wanted to deal with us bilaterally. That's why in the end we agreed, okay, each of us have different interests, different issues that we are facing with the U.S. Those are specific country issues, but there are common issues, like, for instance, the rules of origin or the transshipment, which is common to all of us and that can be harmful if we agree to a certain direction, like restrictive rules of origin. So in the end, I think we agreed that we take a common position where we can, where it's going to hurt all of us and hurt the trading system. We try very hard to maintain that common position.
You've worked closely with the WTO. I'm just wondering whether bilateral agreements weaken organizations like the WTO and perhaps even impinge on its efficiency.
Old question. It's kind of like are bilaterals and regionals building blocks or stumbling blocks for the multilateral trading system? I think it's in our interest as middle-income countries, as developing countries that benefit from a rules-based multilateral system, to maintain that whatever we do bilaterally or regionally, that we do it in a way which is actually reinforcing the disciplines and rules, and actually move forward in areas where the WTO has not been able to move, like digital economy, e-commerce, or even some of this green agenda. We could take the move forward, right, and deepen our openness in terms of regional economic integration. So lead the way by example, demonstration effect, but also we should play a role in whatever is going to be happening in the WTO.
But Mari, always a pleasure to have your perspective. Thank you so much for that. Mari Pangestu, Indonesian President's Special Advisor for International Trade and Multilateral Cooperation. Let's do a check on Indian assets. Having a strong day today. The Sensex up about 5% on the back of that trade deal signed with the U.S. We're also tracking Aussie assets on the back of the RBA raising rates 25 basis points. Still ahead, fresh insights on the U.S.-India trade deal with former U.S. Assistant Secretary of State Nisha Biswal. She'll be joining us very shortly. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insights, coming to you live from the Indonesia Economic Summit here in Jakarta. Asian markets stabilizing after posting their steepest two-day drop since April. Stocks in the region getting a lift from tech, with Korea in focus after Monday's plunge. Gold and silver drawing back some losses following the recent sell-off as traders exited the record-breaking rally in precious metals. We're also keeping an eye on Australian assets after the RBA bucked the global trend with a 25 basis point rate hike. The central bank expects inflation to remain above target for some time and says it is focused on price stability as well as the labour market. Japanese bonds are also in focus after Nomura bought 12.4% of the 10-year bonds sold today. The government bond auction saw weaker demand from its 12-month average of 3.24, with a bid-to-cover ratio at 3.02. And Indian stocks surging after President Trump announced a trade deal with New Delhi. Trump says India will stop buying Russian oil as part of the agreement, while the deal could bring relief for exporters and investors. Weaning India off cheap Russian energy will come at a cost, particularly for industrial companies. Let's get more on this with Economy, Trade and Investigating Agencies reporter Shruti Srivastava in New Delhi. Shruti, put this in perspective for us. It is good news, however you look at it, isn't it?
It is definitely very good news for the Indian government and officials who have been negotiating a trade deal with the US counterparts for months now. Of course, it's a very good news for the industry and manufacturers, especially in the labor-intensive sectors who have been struggling with high US tariffs for months now. Sectors like, sectors like footwear and apparel, they are the one, and gems and jewelry, they are the ones who are going to make maximum gains. And the fact that it comes in quick succession after the EU deal, which was being billed as the mother of all deals, this is indeed a very good news for the industries which were struggling to sell their shipments in the US market. So definitely a good day for India. The deal has also helped contain some of the volatility in the rupee, and as you said, all the markets are looking up.
How might this play out in the Indian economy? What kind of a boost will it provide?
So, in the federal budget, which was unveiled on Sunday this week, the government has given a projection of an economy to grow between 6.8 to 7.2%. But some of the economists are saying that this might boost India's economic growth by 0.4 percentage points, which would mean that, we may see some boost to India's economic growth this year. Let's put this in context. I mean, while the government had given that projection, the markets were not very bullish on outlook for the Indian economy. But with this deal, some of their concerns are being clearly taken care of. And the exporters who were waiting for the summer season orders, and their orders were on hold. So they would also see orders flowing in. So indeed, this is a good boost to the economy for this year at least.
I'm just wondering at what cost, Shruti, because India is weaning itself off from cheap oil. That comes at the expense of the economy as well.
Now, that is something, the fine prints of the detail of the deal are still not available. We don't have information beyond what, Trump posted on social media and what the Indian Prime Minister posted on Twitter. While the US side has claimed that India has agreed to wean completely away from the Russian oil, details are not emerging yet from the Indian side confirming the same. India became the largest buyer of Russian oil, after Ukraine war. But after intense US pressure, it did decrease its purchases from Russia. However, it has not completely weaned away from Russian oil yet. While Trump has claimed that India has agreed to do so, there has been no confirmation from the Indian side on whether this is actually happening. So we'll have to wait for more details to come in.
What are the biggest concerns out there, even though this deal has been signed?
So, Haslinda, I would say that right now, I think there are very few concerns. We don't have clarity, of course, what has been agreed upon in agriculture. We don't have clarity on what has been agreed upon on the oil front. India has made a purchase commitment of $500 billion. It will buy energy products, technology products, precious metal from the US. So, all in all, as of now, it seems like a win-win. However, when the details about agriculture to start coming in. We'll have to wait and see what exactly happens. However, this clearly resets relationship between India and the US. The relationship had deteriorated in the past months, and this particular deal clearly resets that. This is patch up between India and the US of sorts.
Shruti, thank you so much for that. Bloomberg Economy, Trade and Investigating Agencies reporter Shruti Srivastava. For a look at the wider implications of the U.S.-India trade deal, we bring in Nisha Biswal, former U.S. Assistant Secretary of State for South and Central Asian Affairs. She oversaw the U.S.-India strategic partnership, including the launch of an annual strategic and commercial dialogue. Nisha, good to have you with us. We heard Shruti saying it is a win-win. Are you confident it is? I mean, the skeptic in me says perhaps it's just smoke and mirrors.
Well, Haslinda, I think this is a moment that we have been waiting on for quite a long time. Certainly, the past year has been one where negotiators, both in the U.S. and India, worked feverishly to get us to this point where we could have a phase one deal. And let's remember that this is not an FTA, as was announced between the EU and India last week. This is a phase one trade deal, and there are many additional areas for negotiation. But look, as someone who's been working on U.S.-India ties for nearly 3 decades, I will just say that it has been a long time coming to see the U.S. and India be able to forge this agreement, and to see India with the EU deal, with the UK deal, really turn its back on decades of a more protectionist approach to trade and actually embrace much more of a global trade posture. And I think that that is really remarkable and something to celebrate.
Nisha, what were the U.S. objectives in this trade deal with India, and how far do you think those objectives were achieved?
Well, I think there were a few different objectives and some still in the works, but certainly trying to expand market access into the Indian market, bringing down tariffs. You heard the president in his post mention that they were looking to bring tariffs down to zero in many of the tariff lines. We'll wait to see what the details are, but that I think is remarkable. Secondly, I think to address a number of non-tariff barriers and, make sure that there is a level playing field between the U.S. and India for U.S. companies that are operating in and investing in India. And I think that getting to a free trade agreement over the next several years with this phase one agreement being a strong launch pad can really help align the Indian and U.S. economy to deepen trade and investment in both directions. There are other areas that are still...
Do you think the trade deal signals a shift?
Absolutely.
Nisha, I'm wondering if the trade deal signals,
signals a shift in India's posture. I think it absolutely does. I think that India... for 2 reasons. One, increasing pressure in terms of the China-based supply chains and the impact on not only India but the global economy. That and then the U.S. tariffs have really accelerated India's negotiations with multiple partners. The way I see it is the U.S. tariffs really incentivize the EU and India to accelerate their negotiations. The fact that they reached such a monumental trade agreement also then put pressure on the U.S. to conclude the negotiations that it had been stalling or that had stalled, I should say, over these many months, and try to get that deal concluded as well. So in that sense, I think India is seeing very positive outcomes on multiple fronts. And I think it benefits actually both the United States and India that you have an India that is finally really opening up on global trade.
Nisha, we know that President Trump wants to boost manufacturing in the U.S. To what extent do you think this trade deal will boost manufacturing in the U.S., especially in areas where India actually has a stronghold, like pharmaceuticals, like IT?
Well, I mean, I think, the issues facing manufacturing in the United States are different and aren't necessarily impacted by this trade agreement. I think the president is trying to reshore to some extent and bring more manufacturing back into the United States. That's going to depend, on the investments. It's going to depend on the labor supply, which, of course, right now we're seeing, changes to the labor policy in the United States. And it's also going to be very much dependent on cost effectiveness and efficiency for manufacturing in the U.S. And so those are questions that the U.S. has to answer. On the other hand, I think that this will open the Indian market to U.S. products in, electronics and machine tools and automotive parts and things like that. And so that certainly creates the market demand side from the India side that can absorb output from the United States.
Are there areas in this trade deal that could be a springboard for further cooperation between the two sides? Technology, perhaps, a case in point, defense.
Absolutely. You're actually seeing it happen this week. The Indian External Affairs Minister is in Washington right now, and he will participate in the Critical Minerals Summit that the president is hosting in Washington later this week. I think that is a indication that as the two economies align and there is strategic convergence not only on the priorities between the two countries, but also the challenges facing both countries, that there will be more incentive to cooperate around these issues. How do you deal with critical mineral supply chains? How do you deal with price volatility? And India, I think, will be instrumental and important part of that network.
Nisha, if you take a wider perspective, how do you think this trade deal fits into U.S. strategy in the wider Asia-Pacific, Indo-Pacific region?
Well, first of all, I think India is a huge and massive market. And if you think about, across the board, certainly, there's been a lot of discussion about the agricultural products and agricultural exports, and that is still, a difficult issue. And we don't quite know where things have landed on market access for dairy and agriculture. I imagine that those are questions that have been left for further negotiations down the road. But you will see tariff lines come down on a vast majority of other product lines, and I think that is an important signal for the U.S. and India. Furthermore, let me just note that if the United States is thinking about kind of technology, emerging and advanced technology, AI, India is about to be hosting an AI Impact Summit in a couple of weeks. For U.S. technology companies, India is a very, very important market, not only in terms of the 1.4 billion people that comprise that market, but also because India is a gateway to the global south. So for U.S. technology companies, this is important steps. And I think that you will see that across the board, across many different industries.
We, of course, have to bring China into the conversation. After all, Trump's tariffs and trade policies are aimed at containing China's influence. I'm just wondering, how do you see this trade deal perhaps impinging on China and China's footprint?
That's a very interesting question. And I was talking to a policy expert in India just last week. We were talking about the EU-India trade deal at the time. But one of the things that he noted was the fact that India is orienting its trade and economy towards the West, that it is negotiating trade deals with the U.S., with the EU, the UK, Canada, Australia. It is not negotiating a trade deal with China. It is not part of RCEP. So India, I think, has pursued this strategy as a way to build resilience against its concerns about Chinese dominance in supply chains. And similarly, I was hearing from the EU colleagues about their concern that Chinese overcapacity, if it is not going towards U.S. markets, will overwhelm European markets and undermine European industry. And they see the EU-India trade deal as a way to build a healthy, balanced trade relationship that builds resilience in both markets, the European and the Indian. So I think China is very much a part of the strategy that you see emerging amongst all of these powers in trying to strengthen their own economies and shore up their own industries.
Nisha, as you suggested at the start of the conversation, this is perhaps the phase one. There's still a lot of other issues that need to be ironed out between the two sides. Where do we go from here? What can be expected in the coming months, in the coming years?
Well, first of all, I think we need to get the details of what was agreed to in this phase one deal. And I expect that in the coming weeks, we do know that there has been extensive text-based negotiations. So this is not an in-principle agreement. This is a text-based agreement, and we will need to look and see what that text contains, and then what are the issues that have been left for future rounds. I imagine that a digital chapter is largely still yet to be negotiated. As I said, probably some of the more sensitive areas like agriculture and dairy are yet to be negotiated. So those will certainly be part of future rounds. Much of the non-tariff barriers are probably also left to be negotiated. So I think as we think about the next 2-3 years, there's plenty of work to be done.
Just one final question before we let you go. How would you describe relations between India and the U.S.? Where are we now? I mean, India is a strategic partner to the U.S., but after what we've seen in recent months, that might have changed.
Well, what I like to say, Haslinda, is the population may get emotional about events that occur, but governments can't afford to be emotional. They need to act on the basis of their interest. And between the U.S. and India, there are deep and converging interests that will continue to keep the two countries working together. That said, I think what we have seen from India, from our European partners as well, is a reluctance to be solely dependent on the United States because of the uncertainty and unpredictability that the administration has injected into some of these strategic relationships. So they're going to make sure that they diversify, that they build their own resilience and capacity. It doesn't mean that they will turn away from the United States. I think that the United States is very much still a key partner, but they will diversify those relationships a bit.
Nisha, great insight. Thank you. Nisha Biswal, former U.S. Assistant Secretary of State for South and Central Asian Affairs. Still ahead on Insight, Elon Musk combines his space and AI startups in a deal that delivers a stellar valuation to fuel his costly ambitions in both fields. A closer look at this mega tech mashup. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the Indonesia Economic Summit in Jakarta. Elon Musk's SpaceX has acquired his artificial intelligence startup xAI ahead of a planned IPO set to value the combination at more than $1 trillion. The deal was announced in a statement on SpaceX website, confirming our earlier scoop. For more, let's bring in our Asia Tech correspondent, Annabelle Drulis. And Belle, what do we know so far?
Well, we know that this essentially really speaks to what Elon Musk is trying to achieve, which is dominating not only AI, but also space exploration. And so, yes, as you said, we got that statement that was shared confirming some of our earlier reporting. But in it, Elon Musk basically lays out the rationale and explains what he's hoping to achieve here, which is the most ambitious vertically integrated innovation engine on and off Earth. So that's just a quote there from the employee memo that was shared. But the goal essentially is about bringing together AI, bringing together rockets, bringing together space-based internet, a lot more. In terms of the financial metrics of this, that actually wasn't disclosed in the employee memo, but we did get more reporting from our sources on this. So you mentioned that valuation at more than $1 trillion. It's $1.25 trillion that the combined entity could be worth, or is said to be worth, according to people that are close to the matter. But you're giving SpaceX a valuation of $1 trillion, XAI a valuation of $250 billion. In terms of what is ahead for the company, you mentioned that planned IPO. Yes, that combined entity is still expected to list. We had some reporting early this year that SpaceX was looking at an IPO alone just with SpaceX that could raise up to $50 billion. So, of course, that question, does that change at all now? You've got this combined entity, but it has been the reporting we've had this morning.
Well, how did Musk explain the rationale for the deal?
Yeah, so this really speaks to his overall vision of where AI goes from here. And like several others in this space, AI computations, he thinks, will be best done in space in the next 2 to 3 years. So there's a few different companies that are already working on this endeavor, essentially to put AI data centers into orbit. Now, of course, this sounds very good. You've got more access to cheaper energy. You've got more space, of course, or more room in space for this sort of endeavor. But there are still a lot of technical challenges that we do need to overcome for this to happen, including how to launch and maintain massive solar panels, protect electronics from those very harsh cosmic rays as well. There was a company filing from SpaceX on Friday where they actually said that they want to launch as many as 1 million satellites into orbit to make this happen. But it is an interesting sort of dimension, I guess, putting that AI very directly into SpaceX, and again speaks to that evolution of where he sees it going. But you are really further entangling Musk's business empire at this point.
Belle, thank you. Our Asia Tech correspondent Annabelle Drulers in Hong Kong. And we have breaking news from President Trump. He's saying that he's seeking $1 billion in damages from Harvard. He also says that he wants nothing further to do into the future with Harvard, and that this should be a criminal, not a civil event. Again, Trump saying that Harvard has no option but to eventually cut a deal, and that he's threatening to seek $1 billion in damages from Harvard. Now, still to come, India was forecasting more than 7% growth this year, even before the U.S. tariff deal. The government's chief advisor, V. Anantha Nageswaran, will be joining us to look at the economic impact. Keep it here with us. This is Bloomberg. Let's do a check on Indian markets on the back of that trade deal between the U.S. and India. A long time coming, they say. It took about 6 months or so. The Sensex currently up by 2.5%. We're seeing pretty much green across the board. Also a lift for the Indian rupee, the biggest gain for the Indian currency in a very long time. Let's get perspective from the Indian government's chief economic advisor, V. Anantha Nageswaran. Van, good to have you with us. Your thoughts on this long, much anticipated trade deal?
Yeah, thank you, Haslinda. Good to be back with you. Absolutely. I think this was something that was one big stumbling block to sentiment in the capital market. and also for the Indian rupee, as you pointed out. So I'm not surprised that the reaction is very positive in both these markets. And I mean, at the end of the day, it is the world's biggest consumption market, $21 trillion of GDP. And therefore, to be able to have access to it is important, and for all labor-intensive products. And two, I think the China plus one strategy that many Western companies and multinationals were looking at India as the next location for their global value chains, that thought process was getting a bit disrupted due to these tariff-related uncertainties. Now that would once again sort of be back in contention, and therefore it lends a huge dose of upside to our growth estimates, which we put out just a few days ago in the economic survey. Back to you.
So the growth upside, I mean, what you mentioned was 6.8 to 7.2%. How much more of a boost would this trade deal provide? What number might you be looking at now?
Look, I mean, it's too early days for me to go back and work and look at the drawing board and look at the spreadsheets, etc. But I mean, we just got this news last night, so I don't want to preempt myself by committing to a figure right now off the cuff. But I definitely think we are looking at probably something closer to this year's growth estimate, which the Ministry of Statistics has put out at 7.4%. That would be my first guess. But as I told you, I need to go back to my spreadsheets.
Sorry, so that means it could be higher than 7.4%, thereabouts?
No, I mean, I don't think I can allow myself to be pinned down anything more than this right now.
Then India has commitments of to make purchases of about $500 billion over the next 5 years. Is that intact? How will it do that?
I mean, again, we haven't seen the details. I think these are questions which are probably better deferred to the Ministry of Commerce and the Ministry of Foreign Affairs, because we need to read the details of the agreement before one can comment on them.
So in terms of how it's playing out in the market, are you satisfied that this will provide a boost for the Indian rupee, which has been among the worst performers in Asia for a while now?
Yeah, I mean, of course, to put the Indian rupee's performance in context, over the last 5 years or since the dawn of the millennium, Indian rupee hasn't performed any worse than most emerging currencies which have a current account deficit, just to put it in context. Nonetheless, obviously, in the last year or so, due to the drying up of capital flows, especially on the portfolio side, which has not been made up as much on the FDI side, although it was doing better than the previous financial year, we have had this impact on the Indian rupee, and that was to be expected. And this was proving to be a big mind block on the part of investors, because they were thinking about India being restricted from accessing one of the world's biggest consumption markets, and therefore what it meant for Indian value chain, attractiveness of India for global value chains, etc. So they were extrapolating from this tariff uncertainty onto much bigger and broader questions. And to the extent that this framework that we heard last night, Indian time, allays those concerns, it is going to be a very big boost to capital flows, which are very critical, even though India's current account deficit is extremely on the lower side compared to historical trends. This matters for capital flows, and therefore it couldn't have come at a better time from that perspective.
Van, isn't it true as well that the trade deal comes at a cost? India has had to cut its reliance on Russian oil. India is a big oil exporter. It means that it has a bigger price tag for its oil purchases now. How do you square that?
Well, again, as I said, we have to wait for the details. But off the cuff, I can say that given the global oil price trends with the other oil sources becoming available. And we saw last night that the overnight, when I went to bed around 1 a.m. this morning, Indian time, the Brent crude was down about nearly 5%. And the Indian crude basket, which had gone up in price in the last few weeks, I'm sure will follow the Brent trend. So we are operating in the range of between $60 and $70 per barrel at this point, which isn't something historically problematic for the Indian economy.
Van, I want to take a look at the budget which was announced over the weekend. I'm just looking at the fiscal deficit of around 4.3% of GDP with slower consolidation. I mean, how do you balance fiscal discipline while having to boost growth at the same time?
Well, the fiscal discipline is coming not at the expense of quality of expenditure, because you must have also read that the government committed to more than 12 trillion rupees of investment for infrastructure. And this comes on top of the direct tax and indirect tax reliefs given in the course of 2025 as well. And the fiscal consolidation itself is, in my opinion, a source of stimulus for the economy, because it does keep the cost of capital from moving up sharply. So in that sense, this gradual fiscal consolidation path is very growth friendly, I must say.
Which industries do you think will benefit the most, and what might that translate to?
No, I think there is a wide swath of industries that would benefit from the budget. Particularly, I'm looking at the electronic sector and also the pharma and chemical sectors. These are the ones that would definitely benefit from the budget-related announcements. But I think Indian growth being now likely to be on the higher side as a result of this trade deal, I think there is an upside in many sectors. For example, a lot of boost was given to the tourism sector, and therefore hospitality industry will also benefit from the budget proposals.
Are there measures within the budget that would increase or boost India's competitiveness amidst an environment where global tariffs are on the rise?
Notably, a lot of exemptions from customs duty, the basic customs duty on several intermediates, primary products, whether it is for nuclear energy, whether it is for aircraft parts manufacturing, and for electronic components, battery storage systems. So all these things where customs duty reduction has been announced, they will lower input costs, and that would directly feed into competitiveness. Second, I think there is a draft bill in on the electricity sector that is going through its legislative preparatory process. That would also end the cross-subsidization of the agriculture and household sector by the industry. And that is also a major long-standing issue that has come in the way of industrial competitiveness. Once we can end the cross-subsidization of these two sectors by the industry. So I think in terms of competitiveness, both the budget and other processes which are happening outside the budget, other policy reforms, will contribute to enhancing the economy's competitiveness.
So do you think the budget addresses enough shifting alliances and shifting supply chains in the world today and India's role in that?
The budget definitely makes a down payment on that by boosting specifically manufacturing and looking at customs duty reductions on various intermediate and primary sectors, and also removing tax uncertainties for the electronics and software sector on the global capability centers by raising the safe harbor limits and leaving certainty on advanced pricing agreements, etc. So clearly, the budget makes a very quiet but firm down payment in terms of attracting foreign direct investment, both in manufacturing and in the services sector going forward. And definitely the trade deal gives a much nicer upside boost to those prospects which the budget has set in motion.
Then we know that for India to to grow at, 8-9%, given its potential, it needs to actually create jobs. Where is India headed in that direction? I mean, what's in place right now, and what are some of the takeaways from the budget itself that we saw over the weekend that's actually addressing that issue?
Oh, well, I mean, first thing we need to recognize that the outside the budget development, which is the notification of the labor codes, actually removes a lot of uncertainty both for the employer and for the employees in terms of job creation. That is number one. In the budget itself, if you look at the announcements made with respect to creating allied health professionals, the boost given to orange economy, the tourist guides, and the care economy ecosystem. All of these things are, again, a long-term investment in creating avenues for skilling in areas which will be relatively insulated from the diffusion of artificial intelligence. And therefore, I think those are very clear signals that the budget is laying the foundation for long-term employment in the face of what might happen with artificial intelligence. Secondly, the boost to micro, small and medium enterprises, both through creating the Champion Fund, creating some credit guarantee mechanisms, and massively boosting their access to working capital by giving a fillip to the receivables exchange discounting systems, etc., are also important ingredients for job creation, because much of the job creation happens in the small and medium enterprises sector. So if you take the labor code notification, the announcements regarding soft skills, which are somewhat immune to the AI diffusion, and the boost given to small and medium enterprises, are firm commitments with respect to job creation on the part of the budget proposals.
Then, now that you have a trade agreement with the U.S., what are the priorities for the government, for the economy?
No, those priorities have been already there, and they will continue to get reinforced, which is to make India a place for competitive manufacturing and also continue to reinforce competitiveness in services which India has established. So it boils down to basically making sure that from a policy perspective, we remove regulatory uncertainties, provide policy predictability, etc., and continue to bring down input costs for business through deregulation exercises and looking at tariff distortions, both domestic and external, etc. And these things remain unchanged.
I know the markets are not the economy, not a reflection of the fundamentals, but we know foreign investors have been making exit from the Indian market. Do you think this is the moment where a reversal happens? Do you think international investors will start coming back?
Absolutely. I think from my own conversations with many investors, this question was a big overhang in their heads. And I think this overhang now being removed, the investors would be willing to look at India's otherwise extremely sound macro fundamentals in a much more positive light. Absolutely. I agree with you that this would be one of the most important fillip or signals to investors to return to the Indian market, considering the pervasive uncertainties that prevail elsewhere.
Van, just one final question. The biggest risk for India in 2026?
The biggest risk, it is basically the global geopolitical situation, which could, independent of India now, given that the trade deal has been done, independent of India-centric factors, a global financial market meltdown or some geopolitical conflict, making cross-border capital flows extremely uncertain and tighter will be an important issue to watch out for. And apart from the fact that financial market corrections tend to have global spillovers, I would put these two risks as important risks to watch out for.
Van, always a pleasure to have you on the show. Anantha Nageswaran, Indian Chief Economic Advisor. Now, still to come on Insight, Canada is making a strategic shift on trade, a deal with China, talks with India, and less reliance on the U.S. Former Trade Minister Mari Pangestu will be joining us with her insights. This is Bloomberg.
The middle powers must act together because if we're not at the table, we're on the menu. But I'd also say that great powers can afford for now to go it alone. They have the market size, the military capacity, and the leverage to dictate terms. Middle powers do not.
And that was Canadian Prime Minister Mark Carney's speech, and that was the highlight of Davos for his call for so-called middle powers to come together and rescue the liberal order. Joining us now, Mari Ng, former Canadian Minister of International Trade. Good to have you with us. We heard from Prime Minister Carney saying that, if you're not at the table, you're on the menu. It's well and good calling the middle powers to come together, but it's not that easy.
Well, it isn't easy, but the question is, shouldn't you try and do that? And Canada, we're 40 million people. We're the 10th largest economy in the world. I'm here in Jakarta. Canada and Indonesia have a newly minted trade agreement that I happily was able to do some negotiating and concluding of that. But Canada and its trading partners, whether it's in the CPTPP or whether it's with our colleagues in the European Union, it is time to get to the table. It is time to be ones to set the course for the future. I think the Prime Minister also said that if you, as a middle power, if you're smaller and you're negotiating against any of the large superpowers, you're going to come at it from a disadvantage. So why would we take the path, which is each of us trying to compete to get the best, to get the best by essentially appeasing? Wouldn't we do this better if we were to come together and find a path forward where we actually do have some strength in numbers?
You may not necessarily have the option. I just had a conversation with Mari Pangestu, the former Trade Minister of Indonesia. She said that ASEAN nations wanted to respond to Trump and Trump's tariffs collectively, but they were not allowed.
I don't disagree with that. But I do think that that recognizing that this is the global order that we're in today, we should, as countries who can find predictability, who can find stability, who can find the advantages in each other's supply chains, we should try to do that. I mean, I look at Canada and our trade agreements, whether it's with the CPTPP, so the Trans-Pacific Partnership as a bloc, and there we helped the United Kingdom and supported the United Kingdom to join that pact. And today, the CPTPP are also in discussions potentially with the EU to create that sense of collaboration. I think we have to give it a try.
Mary, it is about diversify, diversify, diversify. But when you diversify, in the case of Canada, looking to China for a trade deal, it is slapped with 100% additional tariffs. How do you do this? How do you trade? How do you negotiate?
Well, I think in China, just to be very clear, it isn't a trade deal. Canada and the United States, of course, is our largest trading partner, and our second largest trading partner is China. There are issues that are really important for Canada, in particular with those producers. I'm thinking about our farmers. I'm thinking about our canola farmers in particular, or those that export seafood and commodities. China is a market for Canada, and it's really important for us to be able to find a way to work together so that those exports and that trade continues to flow in a way that doesn't have, that also doesn't have tariffs. So we need to be able to do that, and at the same time, do what we do with the United States to preserve this important economic relationship that has served all of our economies for decades and decades. I think the Prime Minister was also very clear. It isn't a trade agreement with a non-market economy, which is what China is. We are very respectful of that provision. We continue to, to keep to our commitments in that trade agreement. So I think it's important for us to be able to walk and chew gum at the same time.
It is a balancing act, though. How do you deepen trade ties with China while still not offending the U.S.?
I think you can do it one step at a time. Incrementally.
How does that look like?
Well, I think right now, what's positive is that there are the ability for the two countries to be talking to each other and sort of taking good progressive steps forward. Having the tariffs significantly reduced for our canola farmers, I think, is really good. Let's do that and make sure that that continues to work, and let's create some stability there. I think you do it one step at a time.
We heard Prime Minister Mark Carney talk about how this is the new world order. Does this new world order come at a higher cost for companies?
It may well. It may well. If you think about how manufacturing is done in Canada, if you think about the high standards for our labor and our wages, or the high standards that come with the cost of just doing business in a sustainable way, those are costs that have been inputs into our economy, and it's a choice that is made by those countries wishing to collaborate and to trade with each other. I think that is good. I think that every economy wants aspiration for its people. They want better conditions for their workers. I think that they want their middle class to grow and to increase their economy and to prosper and to create productivity and competitiveness. Those are the kinds of things that Canada has always been able to offer, and we do that willingly, and I think now we're looking for partners to do that and to keep doing that with us.
In the end, in 5 years, do you see the world decoupling even more? I mean, some have suggested that it's strategic decoupling, especially between the US and China. Is that what we're looking at? And, how about the rest of the world? Where do they fall? How do they fall in line?
Well, when you think about, when I think about our trading partners, and what is it that I do in the past as the trade minister and now sort of, as someone in the private sector, it is finding those opportunities to make sure that we get those companies, those technologies, those innovations into other supply chains. So here in Indonesia, are we able to collaborate on education? Are we able to collaborate on technology? Are we able to collaborate on the technology and the knowledge for the sustainability in mining? Mining is a big sector here. And we have enormous, wonderful Canadian companies that offer capabilities sustainably. Can they be the companies that will go into those supply chains? And I think that we're going to do that not only here in Indonesia and with markets that are here in Asia, but with all of our trading partners as well. And I think we're doing that vice versa. And yes, we will continue to be a trading partner to the United States. How could we not? They are our neighbor. They are, we have done this for decades upon decades. There are tremendous industries that are tremendously integrated, and it is our hope that we continue to do that. But it is also, I think as Prime Minister said, we have to live in the world that we are in and not for the one that we wish. And therefore, we must plan accordingly and find those relationships and diversify accordingly.
Right. And it is a balancing act.
It is a balancing act.
We thank you so much for your time today. Mari Ang, former Canadian Minister of International Trade. Well, we'll have more of our conversations. Of course, I'll be speaking with a Finance Minister of Indonesia. We'll bring you the details later on. This is Bloomberg.